Mindcypress. Education beyond boundaries.
Now, let's understand KYC components and lifecycle overview. CR Customer Review, Onboarding/Periodic. Review customer information at the onboarding stage and later, periodically. CIP Customer Identification Program. CIP helps in knowing the true identity of the customers. Identity information is collected and verified against either documentary evidences, example, passport, partnership agreement, non-documentary sources, example, LexisNexis, regulator websites, or both of the above. Most financial institutions collect the following information at the CIP stage: name, physical address, date of birth for individuals, and government identification number for individuals, social security number, SSN passport driving license. For entities, tax identification number, TIN employer identification number, EIN. The CIP information will be screened and verified at this stage to avoid onboarding any client who is sanctioned or otherwise pose risk to the bank due to negative news, pending litigations, etc. CDD creates a customer profile. In this stage, further information is gathered to understand the nature and purpose of the customer relationship, obtain expected transactional or account behavior information, and identify related parties, including beneficial owners. Normally, the following information is collected during CDD. 1. Entity, business information, source of funds, geographic information, industry type, North American Industry Classification System, NAICS, code, and etc. 1. Individuals, occupation, employment, source of funds and wealth, country of residence, citizenship, and etc. 2. FinCEN CDD final rule guidance, that is identification and verification of beneficial owners with 25% or more equity interest of entity customers and other related parties, ownership prong and / or control prong. 3. Other related parties such as an authorized person. Screening is the mechanism of conducting background checks in order to identify potential risks associated with the customer and related parties, including beneficial owners. Screening is conducted on an ongoing basis for the purpose of identifying information that can be indicative of higher risk factors, such as: is the customer-related party a part of the prohibited blacklist financial institutions? Is the customer-related party a part of any sanctions list? Is the customer-related party a PEP? Is there any material adverse negative news about the customer-related party? Screening reports are reviewed to determine if the result matches the customer and the materiality. Example, if the result is the same as the screened customer, and if so, will it cause any reputational, regulatory, or financial risk to the financial institution? All material hits either escalated or further reviewed to obtain satisfactory conclusion of either continuing or exiting the relationship with the customer. CRR Customer Risk Rating. During CRR, a risk rating is derived for each customer file, which determines the level of due diligence, transaction monitoring treatment, and frequency of periodic reviews. The risk rating is usually system-generated, which calculates a score based on the information collected during CIP, CDD, and screening. Below are some of the factors, including examples, that impact a customer's risk rating due to the associated risks. Entity type, for example, complex ownership structures, nonprofit organization. Industry type, for example, extractive industries, arms dealers. A jurisdiction, for example, Syria, North Korea, Cuba. A product and services, for example, automated clearinghouse, cross-border wire transfers. Channel risk, for example, non-face-to-face banking, third-party intermediaries. EDD, enhanced due diligence. Why and when? EDD is performed on high-risk customers to gain a deeper understanding of the customer and determine if periodic reviews will be conducted more frequently in an attempt to mitigate the higher risk posed. Information may include source of wealth and funding, ownership structure, anticipated transactions, understanding the relationship between the customer and the beneficial owner, identification of PEP, etc. Below are some of the reasons a customer may be subject to EDD. Screening results show a positive PEP hit, sanctions connections, material adverse news, etc. Nature of business makes them potentially vulnerable to money laundering, terrorist financing, or other financial crimes. Ownership structure. Source of funds and wealth is not in line with assumptions from business income. Opted for high-risk products such as ACH, automated clearinghouse, wire transfer, etc. Transactions expected in high-risk countries. Other suspicious or unusual activities alerted. Let's understand. Periodic refresh. An ML spectrum of activity. Preventive, detective, or onboarding. Periodic review. In addition to collecting customer information at onboarding, periodic refresh or ongoing due diligence is also conducted in which customer information is refreshed on a risk basis to ensure that the information is accurate, current, and complete. If the refresh identifies significant changes to the customer's risk profile, then the required KYC must be completed to satisfy the requirements of the new risk rating customer type. Below are the types of periodic reviews. Periodic review schedules, example 1, 2, 3 years, are determined by each institution's policies and risk-based approach. This review is based on duration from initial onboarding. For example, high risk, 1 year. Medium risk, 2 years. Low risk, 3 years. Triggered, review based on an event that would affect the customer profile, such as alert investigation, subpoena, changes in ownership, negative media, suspicious activity.